Welcome to the Essential Tax Podcast with your host, Mishkin Santa. In each episode, we'll take the complex world of tax, all the jargon, acronyms, and stuff that make your eyes glaze over, and explain it in an impactful way to understand the complex and unknown areas. You can find this show on all the major platforms, including YouTube, LinkedIn, Apple Podcasts, Spotify, and on our website, thewolfgroup.com. Now, here's the host of Essential Tax Podcast, Mishkin Santa.
Hey everybody, welcome to the podcast. Today I'm super excited. I've got David Warner with me, and we're going to get into a topic that I'm shocked to even say that we still do a lot of this work to this day. But basically, I think the best way I can put it overarching is what we call offshore voluntary disclosure. And it's really interesting, here in 2025, I would say almost on a weekly basis, I still get, 3 to 4 people a week that pop up in my lead queue. And I talk to them and they have some kind of issue where they failed to report a specified foreign financial asset or some form of foreign income. And they've just recently been alerted to the fact that they need to do that. And they're in a kerfluffle. They don't know what to do. They've read horror stories online, and so step one is always, in my opinion, you got to kind of talk them down a little bit and say, okay, it'll be all right. But then you got to figure out kind of, what the issue is and then what you're going to recommend to solve the issue. And I did a webinar on the topic with David a while back, and I thought to myself, gosh, this guy would be great to have on the podcast. We can chop it up a little bit, do some back and forth and talk about, OVDP and the current iterations that we have available to us in the current climate. So that's why I've asked David to be on the podcast today. David, let's take a second. Can you give our audience a little bit of insight into who you are, education, background, where you're licensed to practice, all that good stuff?
Sure. Yeah. First of all, thanks for having me, Mishkin. I really appreciate being on here. I love talking tax, and I love the purpose of this podcast, kind of breaking it down into simpler, easier to understand, because it is a very complex topic, but it can be broken down. And so I'm looking forward to this. I'm a tax attorney with Holtz, Slavett Drabkin. That's my law firm. We're based in California. But going back, I'm originally from Minnesota. Got my bachelor's in poli-sci and history from University of Minnesota, and then went to law school at Loyola Law School in Los Angeles. I focused on tax. I knew I wanted to do tax going into law school because of my work experience kind of between undergrad and law school. And then, so I did Loyola for law school and then did my tax LLM at NYU. And then after going out of NYU, basically it was 2008, 2009, nobody was hiring except for the IRS. So that's how I ended up getting a job inside the IRS Office of Chief Counsel, where I worked for 9 years. And we'll get into a little more of that. And then now for the last 7 years, I've been on the other side, representing individuals and businesses before the IRS and state tax agencies, helping resolve offshore and domestic issues of all types with tax agencies.
That's awesome. So David, your resume and your background is eerily, at least the way you got into the IRS is eerily similar to the way that I did it. I went to Seattle University for law school and then did my LLM at Boston University. NYU is a fantastic, for those that don't know, the LLM programs for tax, NYU is king of the hill. They're a great program. I think Florida has a great program. BU has a great program. Georgetown. And then, same time, I came out at the same period of time, and, it was a tough market. And, getting into the IRS chief counsel, it's kind of a blessing in disguise. So let's talk about that a little bit, though, kind of that time period that you came in. That was a really, from my seat on the bus, it was a really awkward time period. I started off as an extern with the IRS, and I kind of got to see a little bit of each of the different divisions back then. And the one that I kind of stuck with was, it no longer exists. I think they changed the name of it, but it used to be called LMSB. I think now they call it LB&I. And I remember they had these massive projects, and they'd say, well, you have one tiny issue on, the sub issue on this massive project, which you really don't really know what you're doing on there. And you kind of work on it, and you put your stuff in, and then you really wouldn't know what happened next. But tell me about your time period at the IRS, kind of how you came up through there, and kind of your background with the offshore voluntary disclosure disclosures that were made inbound into the IRS.
Right. Yeah, I too worked for a division that technically no longer exists because just recently they took LB&I and SBSE and merged those into what's now L&A. And so I joined SBSE, Small Business Self-Employed,
Okay.
when out of my LLM program. I was down in Orange County, so, about 50 miles south of Los Angeles, in what at that time was the Laguna Niguel office. Since has moved a few miles away, but my work there, my primary role was litigating and representing the IRS and U.S. tax court, which is the primary forum where if you're going to dispute the IRS, that's where you're going to challenge them. Mainly, you don't have to pay in advance. You can challenge the IRS and what they determine based on an audit without having to pay it first. So I worked. That was my primary role. I handled about 500 cases before in the IRS and U.S. tax court. And my other roles, I handled a lot of offshore matters. So I advised a local SEP, which is a special enforcement program group. They handle some of the bigger, more complex audits, a lot of stuff that might be going criminal, might not be going criminal. They handled a lot of the offshore projects initially. And then also once it became LB&I, like you talked about, they switched the name from LMSB to give it more of an international flavor. Once it became LB&I, there was a group inside of there called LB&I IIC, which stands for International Individual Compliance. I also advised that group for Southern California. So helping out, there at that time, it was a lot of the UBS cases. So it was people who were US persons who had a bank account at UBS and they didn't properly report everything on their tax return or file FBARs, the foreign bank account report. So then, the IRS is auditing it, looking at international information return penalties for not filing, 5471, 3520, and we'll get into what all those are, but didn't file FBARs. And so I was helping advise the agents, recommend penalties. I approved all FBAR penalties for Southern California for 9 years. So any willful FBAR penalty, and at first it was non-willful too, but at a certain point they said the agents and their managers and territory managers can approve non-willful penalties. And so I focused on willful penalties and approved all of those. And then also I helped out with once the OVDP started, once streamlined programs started looking at, for some taxpayers, is this actually a non-willful violation, or they happen to forget about this multi-million-dollar account when they did their streamlined disclosure? Maybe this looks more willful, and we should pull them out of the program and do a regular audit. I handled that kind of work as well. And then I had one more focus at the IRS was partnerships and S corporations. So helped found the Southwest Area Partnership Cadre, which is a group of subject matter experts inside, like revenue agents, their managers, counsel attorneys. There's a group of about 8 or 9 of us at first that started it, and since this program's been rolled out nationally after I left the IRS. So that's focusing on helping revenue agents who have issues with partnership or technical partnership or S corp issues, helping them understand what they're looking at, how to read a partnership or LLC operating agreement, things like that. Work inside the IRS.
Yeah, there's a lot of issues. I don't think people realize how many issues flow out of Subchapter K and Subchapter S, and a lot of it stems from those original operating agreements. I see so many S elections being blown inadvertently. People don't understand what they're doing. They're like, oh yeah, I did this. And I'm like, well, yeah, you don't really have, you do understand you no longer have an S corp, you have a C corp because you blew that election when you did action A, B, or C. And it doesn't occur to a lot of people. And really where it comes in at is they're doing some kind of, in this day and age, it's private equity. Private equity comes in and they do their due diligence, and they come back to the person trying to get the sale done, and they say, hey, we're not buying a S corp, we're buying a C corp that changes our offer to your firm. And then you just see the blood running down their face, saying, "Oh my goodness, how did I not know this?" But yeah, there's a lot of issues that flow out of that. Let's take a step back here for a second, because I still remember back in the day before the Offshore Voluntary Disclosure Program, voluntary disclosure practice has been around for a very, very long time. And if you had in our world, I think, David, we see a lot of atypical, weird fact patterns that come through that don't really fit like an exact matrix. We see a lot that do, but we see a lot that don't. And prior to the Offshore Voluntary Disclosure Program, the way that I understood it, or the way that I've seen it done, is you kind of figured out who was the special agent in charge at the IRS or wherever it was, and you kind of made a, hey, what's the deal of the day? This is my general fact pattern. You didn't give them any specific details. You talked to them and you kind of gave them a general rundown of, the issues that you think the client had. When then you say, what's the deal? What's the deal of the day? What can you offer me if I get my client to come forward and do a voluntary disclosure? And they would say, okay, well, this is what we're going to offer you today. If your client does come forward, this is what you can kind of work with in your matrix. And then for offshore voluntary disclosure, I think the IRS realized that they had to put that kind of in writing, kind of a framework, because it wasn't as intuitive, and they wanted kind of maybe a one size fits all. And you see throughout the history of offshore voluntary disclosure, I think there was a 2009 program, there was a 2011 program, a 2012 program. That's where I did the majority of my voluntary disclosures. I've done some 2011 OVDIs. And I've done the large majority was 2012, 2014. And then from there, streamlined filings, we've done 1 million of those. But that's kind of how the iteration worked. It started with, this general practice that you kind of had to just wing it and get the deal of the day. And then it became a little bit more kind of, line itemed out. Can you just briefly talk about your kind of observations with kind of how that came into being and kind of where we're at with that today?
Yeah, it's funny that you mentioned that, because I was part of the initial OVDP training when they were rolling it out in 2009. And the person who was running those trainings had been at the IRS for 20 years, and he dealt with other projects. Because before OVDP, there were other projects. There was the focus on Liechtenstein. There was a project. There was offshore credit cards. There was a focus in the early 2000s. And it's true what you said. The voluntary disclosure practice inside of CI has been around for decades. And so OVDP kind of layered on top of that at first, because the very first program, you were still submitting through CI and going through that pre-clearance process, kind of similar to the OVDP, the offshore voluntary disclosure practice that exists today. Right. But what's interesting was in the initial training, the person who was leading it got up there and said, okay, so in the past, there used to be kind of like, in this part of the country, there would be this deal. In this part of the country, there would be this other deal. That's all done. We want a uniform system that applies to everyone across the country. So it doesn't matter who you call up or what revenue agent you happen to get, you're getting the same deal. Because we don't want these pockets of more enforcement, less enforcement here. We want a uniform system of call it an amnesty program if you want to help people come into compliance. It'll hurt a little bit to come into compliance, but you have to pay something. But we want it to be uniform. So that was definitely a point in the training for going back all the way to the original 2009 program.
Right. Yeah, and then I just to follow up on your comments there, when I talk to clients about doing streamlined submissions, which just so everyone understands, OVDP created a carve out, which was a little bit more straightforward for your non-willful folks, called the streamlined filing compliance submission procedures. I believe that was 2014. And I'm still in shock. Every morning I wake up and it's it's still on the IRS website. It's still there. And I'm like, okay, we've got another day where we can still do streamlined filings, because I think it's a great program. I especially like the foreign program. I always tell people to qualify for that. I'm like, that's a blessing in disguise. If you can get into that, do that all day. That's the best program they have. But so, when I'm talking to clients about it, I always tell them, when you're talking about the pain, it's the pain that come forward and to file and to do all this stuff. But I always tell them that it's kind of like going to Catholic confession. I'm not assuming all the clients are Catholic or anything, but you kind of go in, you confess your sins, they bless you, you get your one time get out of jail free card. But then once you've been blessed and you kind of confessed your sins and you've gone out of it, I always tell them it's a contract. If you take a look at what you're signing, the 14653, the 14654, you're telling the IRS, not only am I coming forward and giving you a clean submission for this filing here, going forward, I promise I'm going to do everything timely and I'm not going to have any recidivism. I'm not going to go back and forget to do something or not do something correctly. And it's always a warning I have to clients. It's like, don't just get through this on the other end and then forget to do it or not do it or get back in your old habits. You got to continue to do it clean, timely, all that stuff. And, they can always come back. And if you fail to do it in the future, you can't do a second stream. Or my understanding, you can't do a second streamlined filing. You're basically willful at that point in time. And they could potentially even undo your first streamlined filing if you don't continue to do it, properly. And so we always advise them on, okay, you've come out the other end of it, you need to continue doing it properly. And then how do you maybe simplify your life moving forward so that you don't have to worry about having an issue with this stuff? That's kind of a third step that we do for a lot of people. But
Right.
that's what we do. What do you have any big tips or tricks related to, what you're telling clients these days for the streamlined submissions? Any general words of wisdom or guidance on that?
No, I agree with what you were saying. The one thing we stress is that this is your shot. This is the chance to, so that means two things. Number one, that all your offshore activities have to be reported. You can't forget one account or, oh, I forgot this foreign trust. Like if you're making a streamlined submission or even a voluntary disclosure, any sort of where you're coming forward to the IRS and going into one of their programs, it has to be complete and it has to be accurate. And
Right.
that's key, because that's where things go wrong. That's where, if you're, not as many people are, we'll probably talk about this, but not as many people are doing the voluntary disclosure practice now because of the willfulness certification. But if you go in through voluntary disclosure and you forgot about something, you're headed towards CI most likely, depending on how big of a omission it was. And same thing going back to the prior programs, like you need to make sure it's accurate. And then the second piece of that, with this being your one shot, is that like it's easy, it's better to argue, oh, I messed up, I forgot, didn't know about this. Once I learned about it, I went to a competent professional, they fixed everything, here's my streamlined submission, now I'm good going forward. If you mess up again and start omitting accounts, you'd have to have some really unique facts for it to not be willful. Basically like some sort of, almost like not to the level of mental illness, but like something that, or capacity or competence issue, like to say, oh, my first streamline wasn't, well, I didn't really know about that the first go through.
Right.
That's going to be a harder sell with the IRS most of the time.
Right. Let's talk about that for a second. What you mentioned about the willfulness statement, or what I like to refer to as the non-willful statement. I believe that to be, people always ask me about doing a streamlined filing and, all the forms. And you talked about 5471, 3520. Those are heavy hitter forms. And we will talk more about that here in a second. But I always emphasize to people, because we don't prepare those because we're not a law firm, we're a CPA firm. I always tell people that, in my opinion, the biggest part of that filing is your non-willful statement. It is the compilation of your facts and circumstances, your good facts, your bad facts, your explanation of why you didn't do it correctly the first time around. Really kind of getting, and you can't really make these broad general statements because you're doing 3 years of tax returns, 6 years of FBARs, and you don't want to be careful about saying, well, I didn't know about this. You kind of have to almost look year by year through it. And it's a very detailed thing. And I think I also caution people about, people will tell me, well, I've got, we have a family attorney, they can do the non-willful statement for me. And I always kind of cringe. I say, well, if they don't do tax practice and they haven't really done OVDPs before, I'm not certain they're the best fit to do this particular statement, which in my opinion is the most important part of this filing. What's your approach to the non-willful statement? What general comments do you have related to that?
Yeah, I agree. It's important because it's really the only factual section besides the tax returns and a few numbers. So that statement is all that provides additional color for the IRS to view this whole submission. So the non-willfulness statement, my general view is I generally take a framework of looking at similar reasonable cause. So
Okay.
you start with like the regulations on reasonable cause. It talks about ordinary business care and prudence, and starting with that as a framework of what steps did you take to make sure everything was done correctly. And then right under that in the regulations, it talks about reliance on a tax professional. So and that's where you get into the famous cases that talk about kind of the three elements that you're looking for. Did you is it a competent professional? Did you give them all the facts they need? And did you actually rely on the advice that professional provided to you? And you're kind of looking at those three things. And that's the way I work through it. So starting with what steps did the taxpayer take? Did they have a tax professional? Did the tax professional even know about the foreign accounts? Because that's a tricky point. If the professional doesn't know about the foreign accounts, then you can't really say you relied on them. But then that's when you dive deeper on, what did the taxpayer understand about reporting foreign accounts? Are they from a country that doesn't have reporting like this? Or trying to use some sort of background facts to help support it. But that's my overall view is kind of looking at it similar to reasonable cause, in that you're telling a story about how this taxpayer did everything they could, but despite their best efforts, they just couldn't fully comply because of these, specific rules or technicalities or whatever the specific facts are for that client.
And what is your approach when you're, one of the things I always like to talk to people about is their general education, their level of education, kind of what they do. Believe it or not, I've actually had IRS agents that have had to do streamlined filings, and so I'm like, that's a tricky one because you work for the IRS, but I've been around the block long enough to know that not all IRS people really understand the international stuff, and so I don't really hold it against them if they didn't know that. But what's your general approach when you get someone that maybe is an accountant or is an attorney and probably should have known the stuff but does not know it? Like, how do you deal with that when you're talking about non-willfulness?
Yeah. So I would start with identifying their exact level of knowledge about the specifics of these forms, because just knowing tax doesn't mean that you know all of tax.
Right.
So for example, I actually had a tax court case where we just got an opinion on it about 6 months ago, and it was a fraud case. It was a tens of millions of dollars fraud case, and my client has a tax LLM. He never practiced tax law, but he went through the steps, almost finished law school, had a tax LLM, but never practiced it. So kind of, in the specific adjustments in that case, they weren't offshore, but they were a very specific small slice of tax. It was highly technical. And so kind of in there, it's a similar kind of idea of, well, yes, he took these classes many, many years ago, but then, a lot of time intervened and he hired other professionals. And so trying to put some space and the reliance on other people as well might be another avenue to look at. Is, if they're an accountant, but they had a different accountant prepare their tax returns, and that accountant didn't file all the proper forms, then maybe you have an argument that kind of intervening tax professional helps you with getting closer to non-willful. So that's what I'm looking at, is kind of, are there other tax professionals involved? This is a highly technical area where my client, who has general expertise but not the specific expertise on that issue, is that the kind of thing? Like if it's an IRS, for example, a revenue agent, do they do offshore cases on a regular basis? If so, then you're probably in trouble.
Right.
If do they, are they a tax examiner who only, audits the earned income tax credit and has no experience at all in offshore matters? Then that would be a completely different matter.
Right. And, the LLM program, just to make a quick comment on that, I mean, maybe they've changed from when we were in school, but I don't recall a single class being offered about international forms or there was obviously foreign tax credit. I think you take a couple classes in that. There was I remember taking transfer pricing, and there's international stuff in there, but I don't recall any specific classes like, okay, this is, CFC, class 1 or foreign trust class 1. Like, I don't recall any of that stuff in there. And honestly, I'll tell you, one of the things I've always thought about was, being a professor for an LLM program in the future, and maybe having a class where just that portion is taught, because I think that's an underserved area where they don't really teach that a lot in the law school and the LLM programs that they probably should.
Yeah, it's actually, so I taught in three different at 3 different law schools.
Okay.
And I taught in Loyola's tax LLM program. I taught tax procedure there for 5-6 years.
That's a good class.
Yeah. And so what I did was, it was 13 classes, and the first 12 classes were all your standard tax procedure stuff, the statute of limitations on assessment, litigation, refund claims, all that kind of basic stuff. And then class 13 was all international forms.
You threw it in there, huh?
Yes, I had to, because I started teaching that in 2014, and I agree. International tax 1 and 2, those classes are generally focused on: is it inbound? Is it outbound? Is it foreign tax credit? Is it sourcing rules? It's focused on those things traditionally. Maybe it's changed. I mean, I haven't taken an international tax class since 2008, but during the LLM program, I was like, no, like, people coming out need to know about these different forms and the different penalties, because that's a very hot topic, especially when 2014, 2015, 2016, when I was teaching. And so I made a point of teaching those topics because it was so important.
Got it. All right. Let's switch gears here for a second. So we're talking here today's May 8th. and we're going to have a change to the U.S. federal tax code, some form of update or change. The current version of the United States tax code was modified by the 2017 Tax Cuts and Jobs Act, which ends at the end of this. Majority of it ends at the end of this year. So the House, I believe, is doing their markup. I think there was an article today where, with a big focus on today, May 8th, was the salt cap. What will happen with the salt cap? I think that's the big thing that they're wrangling today. There's been a lot of we haven't really seen what they want to do as far as like proposed legislation or anything like that out of the House. But the thought process from what's been said publicly is that the House, will get their stuff kind of out and passed by Memorial Day. Obviously, then the Senate's got to do their thing. Then there's conference, and then the goal is that it would go to the president's desk to be signed on July 4th. Do you see? I mean, I saw a whole laundry list of things that came out of the House a long time ago. I think it was late last year, about things that they were looking at. And it meandered from one side of the coin to the other. And then there's been some stuff that's kind of come out since. But do you see any big changes within international tax with maybe IRS amnesty programs? Do you foresee anything big there? I mean, they were talking about potentially maybe, lowering or having a different way to do the combined reporting of the 8938 and the FBAR, perhaps doubling the foreign earned income exclusion. Anything you've heard of or thought or been told, or any big changes you see happening in this space?
Not so far, no. I mean, most of what's been talked about has been more that I've seen has been, the state and local tax limitation, whether they can creep that up from 10,000 up to something else. Mm-hmm. The hard part is that that's a very costly adjustment, so that there has to be some sort of offset to go with that. Yep. So it'll be interesting to see how they would accommodate that. But a lot of it is also focused on not so much in the international sphere, but on kind of campaign promises, things thrown out, not taxing tips, but then trying to get into the line drawing of what is a tip, and will people start to structure their compensation in a way where tips are, the more of their comp is tips, or they're in these industries that don't normally get tips, and now they're getting these large tips. So it'll be interesting to see how that all plays out. Yeah, I'm looking forward to seeing the legislation, because there's always the consistency from Congress is that there's always another layer of complexity that's going to be added on. Whatever it is, there's going to be more complexity. There's going to be a need for Treasury and IRS to draft and issue regulations to address like the gaps and the places where Congress was like, Treasury, Secretary of Treasury, you can handle figuring out how to fill in the gap for X, Y, and Z. So it'll be interesting to see, but I don't have any specific. I wouldn't bet on anything right now in the international sphere, at least.
Yeah, I honestly don't think they're going to do much there. I mean, I think maybe you get double the foreign earned income exclusion, because that was a campaign promise that he made, a very vague campaign promise about people living offshore not paying any tax. But I'll tell you, just as an aside for everyone that's listening to the podcast, my top 3 wish list, which I don't think they're ever going to do, is doing a 5471 small business form.
Yes.
Like having like a 5471 light form. I think that would be number 1. Number 2 is replacing the 3520 and the 3528, which is used for foreign trust reporting. Back in 2008, the AICPA, through, I believe, Lee Basha and some of the folks with out here on the East Coast, they put together a really cool 1041 NR that was proposed to replace the 3520, 3528. And it's still online. You can look it up. And it's a beautiful, they did a fantastic job. And I there's no such thing exists. There's no 1041 NR, but I've always thought that I think that would be a cool thing to kind of, because the 3520, 3528, I think that kind of, it's just such a difficult thing for people to wrap their head around. And then the last thing is the exit tax. I think I would love to see a brand new version of the exit tax. I think the $2 million threshold, especially when you think about inflation, is quite low. And I get what they're trying to do. They're trying to catch a lot of people in that, but maybe, hey, can we get that increased to maybe 5 million? My dream is 10 million, for the net worth test. That's my top 3 things that I would love to see them kind of put out there. But I think those all create a little bit of havoc one way or another if you try to monkey around with them.
I love the first one in there, the small business 5471, because there's that very limited exception for dormant foreign corps under there's a revenue procedure. And it's like, if you're just a few dollars over the threshold for, income or expenses or assets, like you go from just a bare bones few pieces of information to you need everything. And it's the 5471. This is another thing with the complexity, is that every time there's another layer of legislation, there's a new schedule that gets added to that 5471. So it ends up being, a dozen or more pages just to report one foreign corporation.
And I think what I tell everybody is that the 5471, I think most people can fill out most parts of it, that especially the parts you could do prior to 2017. Where I think people don't understand or they fall down on is your E1, your J, your P, because there's PTEP stuff in there, and there's different categories of reclassification. And if you look at the version for 2018, 19, 20, they're not uniform. The IRS kind of goes through and changes it slightly. So to teach someone how to do that, you're almost, it's like a different version of that form every single year. And like you said, if Congress then passes additional rules, then you have another form or schedule. What are they out now? Schedule Q, Schedule R. I mean, at some point it becomes ridiculous, and you're kind of looking at it like, only someone that's Russell Crowe from A Beautiful Mind could complete this form. Which takes me to a question I have for you. Do you have any thoughts or best practice tips approach? Like, for example, I sometimes tell clients our fees on if they have a 5471 filing requirement, and I always tell them, like, I'm so sorry you have this, and it's the most costly form we charge for at the Wolf Group. It's tremendously expensive to prepare it. If you have to do a 3-year streamlined filing, I mean, it's that cost times 3 plus probably the current year. And then the client always asks, well, do you think I could do it myself? And I'm always like, I don't know anyone that can DIY that form, even with the going through YouTube and Chat GPT. And I'm not certain there's a way to do that. Do you have any, when people come to you like that, do you have any best practice tips or approach for when people talk to you about DIYing certain of these international forms?
Yeah. In one word, don't. You don't want to. That's what accountants and tax professionals who do this every day are for. And yeah, it's expensive because the 5471, like you were saying, at a certain point they'll be on Schedule AA or whatever comes after Z, and it'll be that it is very complex. And so that's where you don't want to do it yourself, because part of it is, especially if you're doing a streamline, it goes back to, this is your shot to come into compliance. And you don't want to submit something where this is incorrect, that's incorrect. It puts a spotlight on the international issue. I think it makes it potentially more likely to be audited, more likely to get information return penalties. And and right there, once you start talking about even the information return penalties are probably, more than the cost that it takes to prepare that form. So depending on the complexity of the 5471. So having a foreign corporation, there's a compliance cost to that, especially if the foreign corporation ownership rises to the level of needing a 5471 form to be filed. And so you need to hire a tax professional, an accountant to do it. We don't prepare these forms for the same reason that our clients shouldn't be preparing these forms, because we don't do that on a daily basis. We help advise, and we can review them to make sure there's no red flags or issues, but it should be, an accountant preparing those who does these all the time.
Right. That's fantastic advice. I love that. I love that comment. Let's switch gears to the Form 3520. And I talked about this earlier. Generally, the Form 3520, also sometimes used in conjunction with Form 3520A, is for foreign trust filings in certain rare circumstances. And this is another one that I hate. And this is, I guess, number 4 on my list here for you, David, is coming out with, because sometimes certain pensions are classified as foreign grantor trusts, and then you got to try to figure out how to mash a pension into a 3520, 3520A. And I've always thought there's got to be a different way to do that, because pensions aren't, they are trusts. A lot of foreign pensions are trusts. I'll grant that. But it's not intuitive for how the staff always come to me, well, how do you create a balance sheet for a pension, So I guess my comment, though, about the 3520, 3520A is, last year, the IRS came out and said that they were going to stop issuing automatic penalties on the late filed Form 3520 Part 4, which is when you're reporting a gift, a large gift, or an inheritance from a non-U.S. person to a U.S. person. And so for those people that don't understand what's happening in there, the IRS, I think in 2018, and I always tell people, believe what the IRS says. When the IRS says they're going to do something, don't just, assume they're not going to do it. But I think they came out in 2018 and they said, we're really going to focus on the penalties for the Form 3520 and 3520A. And prior to that, if you submitted a late 3520, 3520A, you probably didn't get a penalty, even if you didn't do a reasonable cause statement. And then when they came out and said that that was going to be a focus area, it's kind of like overnight, they flipped that automatic switch. And then when you sent it in, even if you put a reasonable cause statement in, you got penalties. And it became a huge kerfluffle, inside the IRS, because then tons of people got these crazy large penalties on, Australian superannuation funds, Australian trusts, the large gifts. I mean, you saw it left, right, and center. And it's really taken a lot of advocacy, not only by the tax professional community, but also the taxpayer advocate, which, by the way, I love the National Taxpayer Advocate. But they've done so much advocacy on this that the IRS finally came out and said, look, we're not going to issue the automatic penalties. We'll actually read these beautiful reasonable cause statements written by people like David. And we'll try to be, have a fair process for whether or not, a penalty will be assessed. What's your take on this? Because in my seat on the bus, I'm a little shell shocked by this. I got a little PTSD. And when someone comes to me and says, or I figure out they've got a 3520, whatever the iteration is, I'm always thinking streamlined filing, because I want that protection. I don't want to have to even deal with a potential penalty. What would be your take, though, if someone comes to you and says, hey, look, I got a large gift. My uncle, foreign uncle in country X, who's a non-US person, gave me $500,000, wired it to my US bank account to help me buy a house here in the US, and I forgot to report that back in 2022. What do you think I should do, for that now? Should I just file the 3520 Part 4 because it's a standalone form with the reasonable cause statement, send it in no, and see how it goes? Or should I try to find a way to do a streamlined filing? And I guess some of this, to deal with a hypothetical fact pattern like this, is kind of like, well, is there anything else that you didn't report? But assuming you just have that floating around, what would you tell them?
Yeah, I think I'd say it's on a spectrum. And that's the way I always kind of look at things, is there's no kind of black and white answer with these, but kind of the fact pattern of foreign gift slightly over the $100,000 threshold, that's on the far end of the spectrum, that I would probably just submit the 3520 with the reasonable cause statement, report the foreign gift, explain why it wasn't originally filed, and how they learned about the need to file it, and put all that in the reasonable cause statement and submit that, because under the it's a long name, International Information Return Submission Procedures, which are the kind of the cousin to the streamlined program, where if you don't owe any tax, you can, the IRS says just submit the form and we may not impose penalty. It used to be we won't impose penalties, but now it's we may not impose penalties. And so I would go that route, because that's what the IRS is telling you to do. Because if it's just a foreign gift, the gift isn't going to be taxable in the US. The only issue is the information return penalty on it. So on a foreign gift, I would almost always lean towards just submitting the form. Now, when you start to get into transfers or distributions to or from a foreign trust, so you have a 3520 filing obligation that's not just a foreign gift, that's when you start getting into, it starts getting a little grayer, and whether the streamline makes more sense, especially with the 35% penalty. You need to kind of weigh that and the risk of that versus if they're outside the United States. We haven't really talked about this with the streamline. As you know, if they're outside the United States, it's just you pay the tax, you pay the interest for 3 years, and you're good to go. If you're inside the United States, there's also a 5% penalty. That's 5% times the assets that were not properly disclosed. So you have to weigh that penalty versus the risk of a potential 3520 penalty. And it's up to the client to decide how much risk they want to take on versus how much certainty. The streamline provides more certainty, but it might be a larger penalty. Filing the forms might potentially result in no penalty or a lower penalty, but there's a little more risk associated with those. So I kind of lay out the pros and cons of each option. Then it's up to the client based on their own risk tolerance to decide which path they want to choose. Right.
It's that critical risk tolerance versus risk aversion matrix. When you're laying out the penalties, because this is this thing that sometimes people get overwhelmed with, because you can literally, you start laying out, okay, well, you missed the 8938, so you kind of go back to 2011 and you say, well, you get $10,000 times maybe 10 years or something. And then you do the F bars and you say, well, but it's not $10,000 for the civil penalty. It's adjusted for inflation. So maybe now it's like 16,000, whatever it is, times however many years. And then you've got 3520 and, you know, what's there, the case that allows them to stack penalties. So potentially you got the 5% of the value of the trust plus 35%, like you said, of the distribution. So you start to add all that up and you show that to a client in a table or something. And then you show, okay, versus the 5% penalty, and you kind of have to estimate that because you don't really ever really know the exact amount until the work is done. Do you do it that way? Do you kind of show them the differential there or the estimated differential, or do you just talk about it ethereally?
If it's an initial consultation, there might not be enough time to lay out the full numbers. But if it's a client who's already on board and they've retained us to help them decide which path to choose, yes, I think it's helpful, especially for numbers-based clients who are more on the quantitative side and want to see it that way. It's very helpful to do a spreadsheet like that. You have to kind of throw in, it's not just the numbers though, because you have to throw in certain assumptions into it. Like you said, it's technically 8938 goes back to 2011. The likelihood of a penalty outside of 6 years isn't that high, but obviously you can't advise, under Circular 230, you can't advise based on risk of audit or, based on the likelihood that the IRS is going to do or not do something. But at the same time, usually you're looking at 3 years or 6 years if you're doing a quiet disclosure where you're just filing the forms with the IRS. So you have to kind of, I generally use those frameworks when looking at the penalties as opposed to going all the way back, like, oh, this person has had a 5471, a foreign corporation since the 1960s. So we have to go back and do 30, I wouldn't have it go that far back. But I definitely do want to look at the numbers and see how that works out, because that's helpful in making it more concrete as opposed to the abstract of you could get audited and bad things might happen.
Right. And just a couple of quick comments off of what you just said right there. So sometimes I'll get clients that are very risk averse, and I'll make the comment, they'll get hung up on that comment where I'll say, well, the FATCA and the Form 8938 that came into being in 2011. So theoretically, you should have been filing the form since 2011. And then the comment is, well, let's go back and amend the tax returns all the way back to 2011. And then I kind of have to be real careful about how you say it, right? Because you're like, well, would the IRS even know what to do with the 2011 amended return? My tax software doesn't even allow me to create 2011 tax returns. I'd have to do it by hand. Good luck finding all the different forms that you need on I'm sure you can track them down, but there's this practical reality, like you said, of the 3 and 6 years. And just so people know, we're not pulling the 3 and 6 years out of a hat there. That generally comes from two different places. One is the statute of limitations for assessment. There's a 3-year rule. And then if you're delinquent by 25% or more of the tax, there's a 6-year rule. There's also an IRS policy statement. I think it's P5133, something like that, where, for it to be in technical compliance, and this is more for an installment agreement or an offer in compromise, they want 6 clean years of tax returns on file. Plus, they want to make sure if you owe estimated tax payments, you've made your payments properly and timely in the current year. So that's where that's the matrix in which I always tell clients, that's what we're playing in. That's the sandbox that you're playing in. Try to be careful about thinking so far outside the box. Like you said, you've got a CFC for 30 years. Talking about going back to 1980 to file amended returns from back then. That's not going to work. That's not going to happen. In fact, I don't even think they had the 5471 back in those years. I think it was a different form altogether. But those are the kind of things that I think people have to be really careful about getting too hung up on. And I think you have to really understand the sandbox that you're playing in to make the decision of which way you want to go with your amnesty program submission.
Right. I agree.
Let's switch for a couple seconds because I want to make sure we get all these questions in. So a 2-part question for you. One thing that they don't have is you talked about the cousin, the delinquent international informational reporting procedures. There's also the delinquent FBAR submission procedures. If you look at the IRS amnesty program pages, they kind of have a little kind of rundown of the different programs. There's never been a program specifically for, S corps, C corps, partnerships, business entities, U.S. domestic trusts. Although we see this a lot, we see all the time. We see S corps that own CFCs and all that stuff. You've got C corps with 5472s, and you're having to just kind of do these amended filings, submit them, and then wing and a prayer, try to combat $25,000 and $10,000 penalties. Do you ever see an amnesty program coming out for entities of any kind? And then I guess the second question would be, I think a couple of years back, they said that they would never do one for crypto or digital assets, but now crypto and digital assets has become a little bit more mainstream, and it's still a big issue, I think. Do we ever see anything? Do you ever think anything like that might come out for that type of reporting?
Yeah, good question. So I think that inside the IRS, amnesty programs generally come about because there's just too much volume of audit work that the IRS can't handle all of it at once. So they need a program for people to come into voluntary compliance where the original OVDP, one of the people that helped create it, likened it to, now I don't like electric shock collars for dogs. I think that's not a good idea for your animals. But that's what they likened it to, as an electric fence, where if the dog chases a squirrel and runs out, they get a shock as they go out, and they remember that shock. But now they want to come back in the yard, but they don't want to go back in because the shock is too hard. So you need to lower the voltage. So it still hurts a little bit, but they can come back in and be back inside the yard. And that was the analogy for the OVDP, was you're helping people come back into compliance. And it hurts a little bit because you have to pay a penalty, but it's a lot lower penalty than if you had just filed all the forms and gotten hit with all the penalties. And that helps bring people into compliance. And so similarly with these other programs, there was a lot of work with the UBS cases coming in and some of the other Swiss banking projects coming in. There's a lot of work the IRS could do. There's too much for if you assign every revenue agent to handle every one, there still wouldn't be enough people to handle all of that work and all those audits. And so that's why they did these amnesty programs and streamlined programs and everything, was to help be able to process and get people into compliance voluntarily. On the business side of things, yes, it doesn't make sense that if you're an individual, you can do a streamline, but if you switch that to a business entity, then you can't do a streamline. That distinction to me doesn't make much sense, but I think that there's not as much of a compliance issue there. Like you said, some 5472s, maybe some 5471s for corporate entities, but largely you're going to be, there's not as much of a compliance issue. So I think that's part of the calculus, is that there's not as high of a volume of potential audits there for those types of situations. So there's no need to lower the voltage to get people to come in voluntarily. With crypto and other digital assets, I feel like people have been talking about it for about a decade now, and it just
a long time.
The tsunami of digital asset audits just hasn't happened yet, which I keep waiting for it. I feel like it's always 6 to 12 months around the corner, and it just never comes. There's been a few criminal prosecutions solely on tax matters with digital assets, but there hasn't been the volume of work. And so because there hasn't been the volume of work related to audits of digital assets, I don't see an amnesty program in the near future. I mean, there's still, for some reason, it still feels like they're in the information gathering side of things. And now with the person who I think the top two people actually who headed up digital assets inside the IRS, both leaving recently. It seems like that is kind of going to the wayside, and it'll be interesting to see what it's replaced by, if anything. But yeah, I don't really see an amnesty program because I don't see the volume of audits right now involving digital assets.
Okay, so there's got to be some kind of critical mass to really force those things to occur. So that's an interesting take.
You see that too with like micro captives, syndicated conservation easements, where you get all these audits, and then they're like, oh, well, there's a lot of audits. There's a lot of litigation happening on this. Let's offer a standardized settlement program to kind of work through some of that inventory, so we don't have to litigate every single one of these cases like it's a tax shelter from the early 2000s. And so it's a similar sort of thing. But go ahead.
Yeah, well, I was going to make a tie-in here to one of the last questions I wanted to ask you, which was about the potential reduction in force to the IRS workforce. First off, question number one, what is your prediction for the reduction in force? Where do you think we'll end up at? I think when I was with the service, I think we were about 80,000 strong. I'm not sure what your total number was when you were with the service at the very end, but I think it's really going to be real tough if you talk about dropping under 70,000 or even some number lower than that as far as workforce. So that's first question is any predictions on that? Second question is, if it does drop substantially, do they find, like you were saying, they don't have the resources to do all this litigation, and if they find the issues that are popping up, a lot of issues, do we feel like they may offer more amnesty programs to try to force the issue to be dealt with in a more of a box of outlined, this is the way to come in and do it, and to try to reduce the impact on the workforce? Do we see more of that coming into play?
Right. Yeah. Pulling out my crystal ball, I'd say that IRS reduction somewhere between 25% to a third is probably likely. But they're starting at a high water of mark of 100,000.
Right.
So if they drop to 75,000, even down to 67,000, which would be a third, those reductions are actually similar to what happened between 2011 and 2017 when I was inside the IRS. It went from like 90, I actually have the numbers in front of me here, 94,000 in 2011, and then down to 73,000. So a slightly smaller drop. But the major grain of salt with that comparison, though, is that was over 6 years. This is happening over more like 6 months. So there's a lot bigger change. But so, I was hired by the IRS in 2009. So I was part of that high water mark and then saw the general decline. They offered early outs to people through the early retirement programs, things like that, to try and get the numbers down and stay within budget. But I think also part of it too is this is all executive branch driven so far. We have yet to see a budget from Congress on what the IRS numbers are going to look like going forward. And so it'll be interesting to see. I know there's a proposal to cut out about $2.5 billion, which is similar to basically taking away the Inflation Reduction Act additional funding. So it'll be interesting to see how much of this is just reversing out what was done based on the Inflation Reduction Act versus a further cut beyond that.
Go
ahead.
No, I was just gonna say, my hope is, obviously we don't want the IRS to, we want the IRS to be in a state where we can deal with them, but we don't want them to be so crippled that it makes it impossible. So right. I think that 67,000 or whatever you were mentioning there, I think that's still, like you were saying, it's a fast reduction, but I still think that they can toe the line at that level. I was getting concerned that people were saying more like 40,000 or something like that, and in my head I'm like, I have no idea how you run a revenue service with such a low number. The sheer volume of people that the IRS serves. I mean, that's a tremendously low number if they go to that route. And you're right, you still need Congress to come in and kind of weigh in on the budget and give their kind of give their 2 cents on the whole thing. So it's an interesting thing that we'll have to watch closely.
Yeah, and I think in terms of the second part of your question about what will happen inside the IRS, will there be more amnesty programs? My experience, so when I was inside the IRS and our numbers started going down between 2011 and 2017, part of it was focus on the higher dollar cases. As an IRS counsel attorney, I have cases in my inventory, some of which are in the millions of dollars, and there were a few that were just a few $100s. So you kind of get all over the spectrum on that. And part of it is focusing on the high dollar ones and finding reasonable ways to settle the lower dollar ones. It will be a focus. And I think that'll be true of focusing on higher dollar audits and not so much on lower dollar audits. And that will be one way to deal with trying to do everything that Congress requires the IRS to do, but with fewer people than before.
Awesome. Okay, last question. This is really more about highlighting your firm and the services you offer. Tell us about your firm. Tell us about what you guys do out there. Tell the audience if they want to get in touch with you for a consultation, how that works generally, and just give us the 30-second or more than 30-second if you want to, elevator speech about what you're kind of doing right now and how people can work with you.
Yeah, thank you. So my firm is Holtz, Slavett Drabkin. We have 9 attorneys who are all former IRS attorneys. We worked inside the IRS for most of us between 6 and 12 years before switching sides and now representing individuals and businesses before the IRS. And we're California based, so mainly the California state tax agencies. So if there's any sort of dispute or you need assistance from a tax agency, we're there to help resolve the dispute or get you the help that you need. Whether it be, you're under audit, you're in litigation, or you owe an amount to the IRS or a state agency and need help figuring out a different way to pay. So basically any sort of dispute with an agency, we can help with. And in terms of how to get in contact with us, you can give us a call at 310-550-6200, or I think in the show notes there'll be a link to my bio as well. So you can click on that and reach out to me that way as well.
Awesome. And one more, I'm going to throw in one more item just to quickly touch on as a reminder to a lot of people, because you're in California. The Franchise Tax Board, or I guess the state of California, they did adopt, or they did conform to the Internal Revenue Code in certain areas. And so as a reminder to a lot of people, if you're doing the Form 8938 or the Form 5471 with your federal return, you also need to make sure to submit that with your California return, because the Franchise Tax Board, I believe, can do the $10,000 penalty on the Form 8938 if you fail to file it. And I think it's a $1,000 penalty on the Form 5471. So sometimes we get clients out of California where we've got to deal both with, say, a streamlined filing and the California Franchise Tax Board for the same kind of international non-compliance. And I assume, David, that you guys can help out with both of those aspects if needed.
Oh, definitely. Yeah, we deal with the state agencies all the time.
Yeah, awesome. Well, great. David, it's been a pleasure talking to you today about all this. This is a subject that I'm very passionate about. This is the wheelhouse I think we both do a lot of work in. Would love to have you back after maybe we see what comes out, if there's something new that touches the international space, and get your take on it. And I hope to see you soon.
Yeah, this has been a lot of fun. Thanks for having me.
Absolutely.
You've been tuning in to the Essential Tax Podcast with your host, Mishkin Santa. You can find this show on all the major platforms, including YouTube, LinkedIn, Apple Podcast, Spotify, and on our website, thewolfgroup.com. Thank you for your positive reviews, comments, questions, and for sharing this show with others.